following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 19th day of May. Wow, May's almost gone, huh? And we've got the Dow up 118 at 20,781. S&P's up 17 at 2382. The comp index at this particular moment is trading at 6,007, up 42. So you've got up 0.8 on the Dow, something 3%. No, it can't be 0.73 on the S&P and 1% on the comp index. Very nice. VIX index is down sharply. It's down 2 at 1179, and that's really adding, besides it being options expiration, that's adding to the pressure to the upside in the market. Buying pressure, that is. I completely forgot. I saw it, and I was busy writing, and then I don't know what happened. I think I got distracted. So I completely forgot yesterday that I had a short-term Chapman wave trend gauge indication that says within 2 days there should be a sharp move to the upside in the E-minis, the S&P E-mini, 9 to 11 points, which should translate to the cash indexes rallying sharply before they give some of that back, and that's where we are right now. I forgot to mention that to my subscribers on my opening call. Can't believe it. I kept saying to myself, there's something missing here in my overview section. That's what it was. It's very important. If you're looking at the E-mini, it's up 18. It's right at the 9-period exponential moving average. So think of this. 2344 goes to 2381, 36 points. The all-time high was 2402. That is 23 points away. So you've had a 2/3 recover. Very good. From the low that was made just yesterday, 2344.50 in the E-mini. But I don't see any change. Now, I believe that this is going to be a match with, so far, it looks quite a lot like the September plunge. Remember, we're down, 400 and something points back in September? Let me find it. September, there it is. Remember that candle? This is the weekly candle, but it's the candle of the week of 9th of September. And then we did sort of sidle down to lower lows, but it wasn't a big deal. We went down the Dow from the high of 18,668, week of August the 19th, down to of course, that was that November, the low at 17,883, the election low. And I think that we're going to be matching a lot of this. We're going to use up a lot more time than price. One of the reasons why I say it is that you've had a lot of very instrumental stocks that are very important to the market, starting to pull back. But you've also got a lot of stocks that have been consolidating from the Dow high back on March the 1st. So this is part of that whole rotational cyclical move that we often get. Now, let me just go here. I wanted to show you what we're looking at. The QQQs haven't made a new all-time high. Nice bounce, up 97 cents at 138.22. I'm not sure they're going to surpass the 139.64 all-time high that was made on the 16th, just 4 days ago. We'll see. Meantime, the weekly chart I've got is a leg 5 up, a leg F, and Chapman wave 5. MACD is still good. Stochastic is just turning down, but still strong at 97%. So we're watching this very closely. Now, let me just take this away, and I want to show you something very interesting. The IWM, which has been a laggard, the RUT 2000, keeps trying to bounce, and it just can't hold. It just can't handle higher prices. It's having a real problem. And as a result, the exponential moving average, the 9-period moving average at 137.08 on the daily, it hasn't been able to get there. And there's a gap to the downside. So what we're really looking is at the soldiers, the Russell 2000, are not able are not able to really pick up the strength in the smaller cap stocks, and that's really important. And the weekly has gone to a peak D. Monthly charts are all around fabulous. So I don't know what's going to happen. I'm not going to get into politics other than to say that all the years I've been here, ever since the Nixon years, I really don't ever recall the kind of excesses in and blatant, as if there is no impunity whatsoever, in leaking very important information. It doesn't matter, Democrat, Republican, what it doesn't what position you have. I think you need to be concerned that when your government, the top echelons of government are leaking like a sieve, something's not right, and you've got to be careful. Okay, so right. With that said, I'm looking at the market, perhaps chopping because there's internal strength, either based on the Fed or based on just on the low VIX, because it keeps coming back down to the under the teens, and it's right now at 11.78. I mean, just look. I said to subscribers, this is probably a great time to be shorting the volatility index on a short-term basis. Oh my goodness, look at that! It screams up to 1628 was the high on the 17th, and yesterday's high was 1630. So it squeaks to a new high and then fails at a peak B minus, and it goes to an E in the weekly and then fails. And that says to me that within the context of the volatility index being under the teens, that allows for buying pressure. Now, let's go on, and we want to look at what's happening to gold, because now gold doesn't seem to have to be an important currency of fear, but it is holding well. It's only down less than 0.5 at 1252. So my contention here is that gold is going into this. There's something else that's happening in the gold, and that within the context of gold, the weekly chart still says to me it's going to be a struggle, but I think there's going to be a try for a climb from 1252 to test the 200-period moving average again in the weekly chart of 1275. If there's a close under 1232 in the next 3 days, that's going to say, no real fear here. So let's talk about the XLF. A nice move today, good, a strong move, up 1%, 23.39, up 24 cents. But the weekly chart suggests that a lot more work needs to be done. It needs to get to 23.73, somewhere around there, to be able to say, no, the magnet of the 2280s is away. I'm done. I'm using it as a, when you turn a magnet around, it becomes a propellant. I'm pushing up towards the 24s. We're going to be watching this closely. I think there's a problem, and we'll go to the TLT, because the TLT is telling us that the 200-period moving average at 123.99 was the repellent, but it's only pulling back 21 cents. So this is still an arch formation that's going into a lowercase m, a double H pattern that goes to lowercase m, and just think of it that unless the TLT breaks into the 125s and holds there, chop, sideways action, and that's the same thing that we'll be looking at in yields. Crude oil had a very nice move overnight. It's still acting well. It's up 1 at 50.67. This is leg D in the crude oil chart. NASDAQ is good. Stochastic's improving a lot. It's at 88%. So, yep, crude oil could possibly go to the 52.20 level. 200-period exponential moving average. Report right now is at 49.12. Basil Chapman, Tiger Technicians Hour. I'll be back. That was 1822. Very interesting session.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman back again. Dow is up 117. I'm doing that. This is the 10-minute chart. I think there's a leg E right here. If at 23.81 it pops to the 23.85, that'll just force even more buying on this options expiration day. I wouldn't be surprised if we're going to start to see some kind of testing of the downside now. So under 23.70, it's 23.81.50. Under 23.79.25, I think it goes quickly to the 23.75.50 area. We'll see. That's what I'm thinking right now, short term, very short term. Okay, so I want you to go through this just to show something very interesting. You know, in the TLT, I spoke about it over the last couple of days, but especially yesterday, I spent a little time saying that the pattern we look for in the Chapman Wave stalk leg formation, when it comes back down, when it concludes, especially if it's a conclusion that takes out the body low of the stalk leg formation, that's the oval pattern, it's always yellow oval, and that would be the 120 area. When it takes it out, be careful, because at that point you can get a sudden sharp move to the upside, and that sudden sharp move is really part of the whole Chapman Wave stalk leg formation. It makes the beak, that's that long move to the downside, and then there's a reflex rally, an oversold rally. And that's part of the thing. And then once the rally's concluded, which I think now the TLT is, you're on your own. Now you have to use different patterns. So what would I do? I'd say, hey, you know what? There could be a left side, right side price time match. Let me see how that would work. So I'll grab the top at 124.98 back on the 18th of April. And I click here, and then I take Trade Station, and I click there, and I quickly get a new parallel. I change the color to green, and that's saying, aha. If that's the low, an exact plumb line, I have to move this away. So space to the right, let's make it 14 just for now. So I've moved it 14 spaces, there we go. And that's saying that there could, if I use this as a plumb line, now normally I'd say, oh, that's going to take too long. I want to see if there's another area that I can use. Well, at this point, it doesn't matter. What I am looking at is that the high of the 18th of the TLT, Lehman 20-year T-bond fund, and the low of 119.91 on the 11th of May would give you a price time move back to 124.98 by June the 5th. Now, to me, that's just way too long. I'd be looking at, if it's going to do it, it's going to do it by the 25th or 26th of this month. And that would say that the market will probably pull back. So when I look at this, I grab the a certain point for the Chapman wave inside wedge target price line, and then it says, okay, now that's support. It needs to go higher. It needs to go to 120. It has to touch 124.01, and that'll start leg C, and that'll be very positive and say, yeah, maybe we do that. And that would say that this market could chop around just a little bit longer into next week, but sometime next week we start to test the lows that were made yesterday. It's kind of the way I'm looking at it. Now, I'm going to press that to see if I can get it on again. Yep, there it is. And what's really important about what I'm looking at is that the yield, and now let me go back to the yield. I'm going to go to $TNX.X. The yield is stuck in this range, and I drew this orange horizontal line to show that we've been here in the 10-year yields of TNX many times before, but we've definitely been stuck here since about 2008. The end of 2008, we've been in this area right now where we are at 2247. So nothing unusual there, but it's still stuck in a lower range, and that suggests to me that regardless of what the Fed says, we're actually looking at the Japanization of our bond yields continuing to this day, to this very minute, because the Fed keeps getting nervous about things that are happening. Now, I wanted to do a couple of things here. I had a couple of very good questions. Actually, I also had a quick statement here. Paul said, the disclosure of fraud is affecting the market in Brazil. The market's looking toppy. If this disclosure comes to America, watch out. You will see a crashing market. The next month should tell a lot. Then summer will roll in. Do make it a great day. I, today, will be out kayaking under the brilliant skies. Hey, Paul, I think that's the thing to do. Forget about crashes and smashes and dashes. Just do your thing. It's really important that you keep doing your thing. And why? Because I think that's all in the future, quite a bit in the future. So I'm not getting carried away here. I do my market line. The Boston Globe today had just 3 major articles that I think I'm going to cut out and keep them for posterity. One has to do with the convention center. Every major market top is involved. The convention center, that you've got to expand it as big as it is right now. You've got to expand it, and you always have to have another 1,000 hotel rooms. It just never fails. There it is in the Globe. And then they had these men's onesies. I did this. This is a Technical Friday, so I want to talk about this. Remember I spoke about a long time ago, I said, how on earth, when you go to the Boston Museum of Fine Arts, any museum, right? You see these pictures of these guys from the 1600s, but particularly in the 1700s. And what are they wearing of the 1700s? There you go. I said, how did it come about that you could get, here we are, I'm moving this over. How could you get all this fancy stuff? Look at this. How did it come about? I'm showing the clothes of the 1700s. Look at the waistcoat. Look at the embroidery. Look at the velvet pants. Look at, what is it that gets you? Look at this woman's. Look at it with the bustle. Look at this. This dress alone must have cost a poor person's 3 years of worth of wages, this one little dress. So the big question is, well, how did we get there? Look at these women's fashion. Well, the onesies, now let me just do this. I'm going to type in here onesies. Men's, I don't even know if it is onesies. Is this how you spell it? Let's see if we come up with that. Yep, there it is. The men's onesies. This is the picture that was in the Globe. This is right here. So I've been talking about tattoos. I'm talking about men's hairstyles. I'm talking about, and this is an observation. Tell you the truth, it's just, you can wear anything you want. It doesn't bother me in the least. So it's got nothing to do with what I'm thinking. It has to do with my observations. And it's not coming up very well. But the onesies is where men's, the T-shirt and the pants are all in one. Little short pants, and you got little buttons. So the big issue is, what is going on, and what is the market saying, And what are the socioeconomic political times that allow for something like this to happen? I don't know if it's going to come up or not. Male rompers, they're called male rompers. They are. Is this a phenomenon that tells us a story that really goes to Paul's issue right here? So all I'm saying is, I waited for this to happen. It's happening. The onesies are in. They're not exactly. Not many people even know about them. So it isn't a fashion statement yet. It's going to be. Oh, there it is. There it is. Oh, I waited and waited, and then I missed it. I'll get it back. There it is. There it was. Now there it's gone. All right. Well, what we're looking at here is a situation where fashion becomes so important. I talk about this over the years. I haven't had to talk about it for a while, but I spoke about it at the last auto exhibition I went to back in January, when design becomes more important than functionality. And that is when we start to think of major market tops. We're not there yet. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. So Dow's up 122, S&P's up 17. I was asked about CX. So Sandra wants to know about CX. And what was the actual question? The question was, Basil, good morning. What do you think about CX for good entry price? Thanks, Sandra. Yeah, I think that it made a doji gap down low yesterday. It hit the 200-period SMA, and it just missed the 200-period EMA. I think that as a trade, it's in the area at 853. Would I buy it right now on a Friday going into Monday? I'd probably say, you know what? you've missed the best move right now to be long on a very short-term basis. But if it pulls back at 8.53, if you can get it on Monday for a quick pop and you can get it down at 8.45, I would even put a 15 to a 20 cent stop. Why? Because it should just gap down and then quickly move back up again, because the stochastic's trying to make a V-shaped recovery. The on-balance volume is very poor, but trying to turn up, and the MACD is not good, but it is trying to flatten out. So just as a trade, now, is it a longer-term buy? I would treat it more as a trade right now. I need to see, because of the candle forming by today at 4 o'clock. We'll see what happens. But this weekly candle suggests that long wick going to the $8.45 area is going to be tested sometime, probably going to be tested next week. So just be a little careful as a trade only. Now, I think your question, Sandup, is more, is this really a buy? And I'm just going to say to you, you could nibble on it now at 8.52, but treat it as just really a starter, like a pilot light entry point to see what happens over the next 3 sessions. So yes, if you make it a small entry, if it's small entry, you could have a 70-cent stop right now, 9%, just on a small entry. But if you're thinking of adding to positions, treat it first as a trade and then see what happens next week. The better buy will be if it comes right back into the 840s, holds very nicely. The market doesn't really tank. I don't want to buy this if the market's tanking, because I think it will be influenced. Let's go to our first caller. We have Brent and Martinez. Brent, how are you?
Doing well, Basil. How are you today?
I'm well, thank you. You'd like to look at?
I'm calling about CBI. I just was going to let you know I haven't really been doing a ton of trading, just a little bit of day trading. I had call options, $11 calls on the VIX that I sold after I made that big move, and then actually that same day, actually I guess it was yesterday, I bought just for a day trade. I did the weekly puts on gold, the GLD.
Okay.
Yeah.
And how you doing there? Because the day is still young as far as gold is concerned.
Oh, I already sold them yesterday. I bought them. I like to do that trade. I usually do it on Friday. But the fact that gold was kind of up and it looked like the market could get a bounce, I bought them at 25 cents and I sold them at 65 cents.
Wow.
So that's the kind of stuff I try to do. And I'm not committing a lot of money. I just, put up maybe 500 to 1,000 on those trades. And then,
I think that's, for this particular market, I think that's an absolutely perfect. Let me just talk to that issue for a second here. If one is really a long-term position player, I'm thinking that if your core positions, if you want to lighten up, you can lighten up. But my monthly charts are still so strong. I don't know what's going to impact them negatively. And right now, I would say that for longer-term positions, you could take some money off that you plan to put back again. But what's really important is that on a shorter-term basis, since the consolidation began the 1st of March, getting in and getting out has not been a wrong thing to do. In fact, for many stocks, that's about all you could do. And I think that's been perfect. I suspect that coming into the next month and a half, we're going to see something play out that suggests what kind of strength do we have in leadership. And I'm just going to just mention this for the moment, like SMHs right now just had a gap up and then just stuck. They're underneath the previous high. We need to see the semiconductor index really come down sharply to affect negatively the overall market, which will affect the QQQs. Now, you brought up something very interesting. Chicago Bridge is a stock that I have followed for decades, I don't know how long, for years and years. And every time I love to look at it and think, this is Crown Castle. So it's Chicago Bridge, it's CBI, I think, or something. This is Crown Castle, also one that I've been following. And it's trading at a 98. This is what you're looking at, right?
I'm looking at Chicago Bridge and Iron, CBI.
Oh, you are? Oh, yeah, it was. Okay, yeah. It was CBI. That's why I'm suddenly confused here. I thought I was picking up CBI. And I had CCI. Oh, I changed it. My mistake. CBI is Chicago Bridge and Iron. Looked at it for years. I mean, not just years. Let me see how long I go back with this stock. Oh, yeah, this is back to the 1997 area. And the reason why it always sticks in my mind, Chicago, Bridge and Iron, and I keep thinking it's the sort of thing that with the high-tech bubble and everything, you keep saying, Chicago Bridge and Iron? How come it's still in business? Well, it's in business because this is infrastructure. And they've had their ups and they've had their downs. They were trading just about 90. Now they're at 21. And I think you've got your eye on something because there will be an infrastructure play. And if there is that is a political infrastructure play, and if there is one, then Chicago Bridge and Iron should start to wake up very soon. And we will know that when it starts to trade in the 25, 26 area. So, did you start a position?
Yeah, what I did, Basil, and this is more just as a trade, and probably not I bought July 19 calls yesterday, and my thinking is that it could possibly go up to that gap that it has around 28.
So just remind me again. Maybe you do, maybe you don't know. Actually, I can do it right here. I want you to see what day the Friday is for the expiration. So you go to May, June, July. So it's the oh, you're lucky. It's the 21st. It's a full 3 weeks of
I was
trade.
trying to pick those ones. I don't like the ones that are the 15th or 16th, or you only get basically 2 weeks out of it.
So, okay. So this is July, right?
Yeah.
Now, if I did a left side, right side price time match, I haven't got any clues right now that the pop-up today is a V-shaped recovery and that it's not going to make an arch formation, get to 2265, the 9-period moving average, and then retest again. So these are the things. Are you in close to the low of the day?
I got in. It was around $19 when I bought it.
Oh, you got in yesterday. Okay.
Yes.
So a 19-something, and it's trading at 2105. So when you enter in a very long-term down move and you enter what could potentially be the bottom, we don't know yet, but it could potentially be the bottom. There are two things that I always say to myself. Okay, if you've got a really good price and the low, in fact, was $18.18, you're in about a point higher. And just a week ago, it was trading in the 25, 26 area. If you're in something that has the potential for a V-shaped recovery, the way to do it is, first of all, to do an option like you're doing. And the other is to say, whatever my entry price is, I'm not taking a loss. Because if it goes below that, I'm in trouble. So if you can hold on, I want to do a little bit more work on the 120-minute chart and the daily, and then we can talk about it. So we've got Brent in California. We'll be right back looking at CPI, Chicago Bridge and Iron trading at 2105 up against 2000.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. We have Brent from Martinez, California. We're looking at CBI, and I wanted to just take a moment because in the back of my mind, I don't have such a great memory, but I have a very good memory for chart formations. It said to me, this is a pattern that I recognize, and then as I looked at it longer, I said, oh. So, Brent, I don't know if you can actually see this on the chart right now. I don't know if you're in front of a screen that you can see it. But I've drawn an oval pattern, 2 oval patterns in CBI, and each time there's been a strong leg. It's almost like the Chapman wave stalk leg on the downside. Now, the reason why I said this looks very familiar is if you go to this pattern right here, I'm going to show you right here. There was a period where I was looking at General Electric, and I said, something's wrong with this picture. General Electric keeps going down. Well, it did the same long sideways oval pattern, broke down back in August of 2000, and if I can remember, it was 16, was it? 2016. Then it went to a lower low, almost like a propeller shaft, 1-to-1 to the bottom. And then it did another one and went to a lower low. And then it had the same kind of pop-up that we're just seeing now in CBI. So here's my recommendation. I was saying to you before we went to the break that there are 2 ways that I think of immediately when I'm looking at a chart pattern like this. One is to start exactly what you did, and you've got options and they are further out. You either have to get them really tight, in other words, it would have been an option for today, you're going to get in and get out, or you wanted to build some strength, allowing for another move to the downside, and then a powerful move to the upside, which would take you about the 6 or 8 weeks that we've got now. So that's number one, you've done correctly. The other is, on a shorter-term basis, the 2263 9-period exponential moving average is really going to take a lot of energy because the MACD and stochastic are still very weak to get there and not just tag the area of the 22s and then pull back. You wanted to break in this leg A or leg B in the daily chart to about the 22 to almost 23 level, as if to say, hey, I'm in. I'm making a V-shaped recovery. You aren't even going to be able to catch me. I'm going to move so quickly. That's really what you want to see. So I like what you did in terms of the options. And all I can say is that for the actual position, you also have the stock, right?
I'm just doing the options on this, Basil.
Oh, you're only doing that. Then you've done what I would consider to be one of the 2 choices in the options. Either you do it because there's options expiration today and you get in, you get out, or you're holding the options because you're not just looking at June. You're going to give it 6 to 8 weeks with a target of at least 24 to 25. And it doesn't matter on the upside because all you need to do is where you are right now and you'll be making a profit, even with the diminution of the premium because of the time involved. My thinking is that you've got a very nice lead on what CBI and many of the others in the area in that same sector the revitalization of the general structure that we need. We need an infrastructure that's being rebuilt, and this is part of it. I like it. I think this is a very nice entry point. If you don't mind, let's have a look at it again, maybe by next Tuesday or Wednesday, and see how it's doing. But in the meantime, I'm just saying, I would put my stop. If you had the stock, I would have put my stop in about where you got in. I would not take a loss, because if it breaks under today's low, it's probably going to retest the lows. You don't need that kind of risk. Rather do it with an option, and that's what you've done. Hey, that's very nice. Congratulations.
All right. Thank you very much, Basil. Have yourself a great weekend. It's always a pleasure talking with you, and you take care, all right?
Thank you. Speak to you soon, Brent. Okay, folks, now this is what I wanted to show you. Here in the 120, in the 2-minute chart, you're saying, we were looking at a sideways consolidation. In the 10-minute chart, this is of the E-mini, that is, what we were looking at is a peak D, which went to a slight E, and now I've got a couple of signs that say the upside might be at a bit of a rest period right now, but there's no breakdown. The breakdown comes if you take out this low for 2 bars in the 10-minute chart. If it starts to trade a close on a closing basis on the 10-minute chart, if it does 2 closes below 2378.25, let's go to 2378. Then you will see a quick move below 2377, which is the next area of support. Otherwise, it's just trading sideways. Pretty good action when you consider what happened on Wednesday. Now, I have a couple of other questions. So Sarah wanted to know about J.P. Morgan. Here we go, J.P. Morgan. Yeah, this is different. The CBI that we were looking at has had a long months and months of consolidating. So that pattern, even though it's gone to a low, is very different to this. I think that J.P. Morgan is going to make a lower low than it's going to break 83. It's at 84.89 right now. I think next week it probably does that. The next question was GPS. GPS is so yeah, Bob. GPS. That's the gap. Didn't the gap have a huge bounce to the upside early this morning? Yeah, gapping. A gap needs GPS to find its way back to the upside. It's looking very poor. It's just taken out the left side low of around about the 20th of March. Wow, this is not good news. Now, we had yesterday a question about Walmart. Walmart had a spectacular move yesterday, and it actually followed through in a leg D gap up on a Friday. We're going to watch this one closely. But there's no question that the earnings, it wasn't that, it seems to me from what I heard, that the report on the internet, and you've got to think internet here, it's just absolutely imperative, is saying that Walmart is in play. I really have to put an up arrow, so it's in a buy mode in the monthly chart. So 78 right now, 78, 76, 73 to 72, very strong support in any big pullback. This is nice to see. I want you to see bricks and mortar make a comeback in whatever area, and Costco closer to its all-time high in the 176 area. But to tell you the truth, I think it's a little tired. Costco might need a bit of a rest. It's going to have to. So 176.18 was the all-time high with a low that day of 173 round number. If Walmart takes out 173, it's going to retest the highs. If it cannot do that in the next 3 days, it's probably going to be consolidating towards the 167 area. We'll be watching that closely. Now, here's something that I want you to do. High-grade copper. And that's interesting. I was given the other day a piece of copper from the Constitution down here in Boston. And some guy went up and started to mess around and maybe it's damaged it. But someone who worked on the copper, he's a copper guy, cut a couple of pieces, and he gave me a piece of the original that they from the Constitution. I don't know if it's the original, but it's a piece of copper from the Constitution. Okay. So copper continuous contract. Yeah, it's a nice bounce, but it went very quickly to peak A, peak B, peak C, and now it's made a leg D. I think copper's just in a range, trading range. We'll see what happens. So let me now talk to this because we're about to go to our break before the final segment. I want to do this. Within the context of what we're looking at here, looking at the VIX index and looking at that September of 2016 pattern, it says to me And remember, I spoke about this the other day. I said, I don't care about some kind of political sharp decline. I want to see what happens in, say, the semiconductors. I want to see the best groups, the real best groups. I want to see weakness in some of the stocks or an outlook that's a little bit nervous. We're not seeing that. We're seeing good results. And that's the reason for subscribers. We still remain short the Dow, but we're being really selective in going short any of the other indices. Why? Because I think there's a little bit more of the upside left in that arch formation. And I'll talk about that when we get back. Here's the arch formation, and we'll talk about that.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So let me just get to this. Sugar still looks good. Remember, I looked at the sugar. It's in leg C. A very quick peak A to peak B to peak C. So that 1-to-1 has so far worked. We'll see if the sugar can get to the 1680s. That'll be very good. Oops, I can't answer that. That's a shame. So now what we're looking at is, well, let me just do this, make it a little soft if you don't mind. Make it soft. There. Okay. So we're looking at, is that what that question? Then I had a question about Caterpillar. Yeah, Caterpillar is being responding upside, up 2 points at 102.23. And why? It's doing that because the Deere had one part of it was very disappointing. The other part of it was great, and it's up 8. It's up 7%. At 121. So Caterpillar is following. And you see, this is part of that whole rotational aspect that I've been talking about. Rotational move to the upside, rotational corrections. we might find, and that's the reason why when Brent looked at CBI, I'm saying, hey, this is maybe we're getting to that whole rotational thing, because the president's going to have to come up with something. And he might have to say, you know what, I'm just going to go full steam. I want to talk about infrastructure, whatever it is, infrastructure. That might make a difference. I don't know what it is, but what we're looking at here is that the market is showing some resiliency. Yesterday was a failure pattern, even though there was a rally. Today you're getting 128 points in the Dow, 18 points in the S&P. That, I must say, is talking to some strength. And once again, it's rotational strength. So I still don't see anything yet in the financials, but definitely. So here's the other thing. So in my Dow quartet, you've got up 52 cents in GE. I'd said today, I always have GE, whether we're trading it or not, I always have it in my 20 or whatever it is, number of bullet points and what we're looking at every day. And I say GE at 27.59. Tradable low forming or just close to a bounce with a question mark. I was going to go long, and I thought, I'm not comfortable going long. I think it's going to be more a bounce. So GE is done. I mean, it's had a spectacular move to the downside, but not when you look at the monthly chart. It's taking the same amount of time to go up to the high, 33 round number high, made in 2016, as it has to come down to the same level this month. So, yeah, it's been ugly. And GE really needs to get to the 28.70, 29.30 area, and then I'm going to say, hey, this is nice. So that's G. IBM has been horrible, but it is trying to form some kind of a base here, back with the low that was made last year in October-ish. It's at 151, and it's really not doing. But Triple M had a fabulous move, and now it's consolidating. Went to a high of 199.90 on the 5th of May, and now it's pulling back. I think it's part of a consolidation, but it's looking great. Looking out, monthly chart still only at C, and UTX, the other one in my Dow quartet. Hey, look at this. Nice move up. It's up at 121.03. The high was 121.95. All-time highs at 124.45. We are still seeing rotational strength. And that really makes it a very select market. And that's really what I'm talking about. I'll talk more about it over the weekend. And for my subscribers, when I send out my opening call, all the different charts that we set up for Monday, I start sending them Saturday morning. So I wanted to do that quickly. I also wanted to say, yeah, crude oil, I'm watching it closely. I think I'm getting close to some kind of a topping action in the short term on crude, but right now it's acting well. So before we wrap up, let me just do this with the VIX index. This is a spectacular move, as spectacular up as it is down. If it takes out the low that was made on the gap up on the 17th of 11.53, and it's at 11.98, if it closes under 11.53 today, I think there could be some further upside next week, but it's becoming very selective. Why? Because the SMHs, which led the way up, must make all-time highs above the 84.77 level, and they're at 83.68, so it's about a point away. And even then, if it's very quick, it might be more an emotional high. I'm watching certain things very closely to see when we want to start thinking of the short side and what we want to be looking at for the long side as well. Basil Chapman signing off. Have a wonderful weekend. Thanks for being here. Check out my opening call. Hope it will be beneficial to you, and thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,